Good evening, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for Wednesday, the 4th of June, 2025, about 5:35 p.m. Central Time. Well, it was a day full of market information. Apparently, President Trump spoke with Russian President Putin. They discussed maybe Putin will join in on some talks on Iran. The president expressed his frustration. And I don't know why he's not making a move, but seems to be waiting. Putin told the president that he is absolutely going to be striking back at Ukraine for what they did when they hit with those drones and they took out so many of the airplanes, the bombers, and something so well planned out for a year and a half. They certainly made Putin look bad. And I mean, that's the stuff of movies. If you're reading how they did this, it's just fascinating. There will be a movie on that at some point. It's just too intriguing of a story. And of course, Putin looks pretty bad with this. And this is not the kind of guy that takes looking bad very easy. Then we had today the ADP report. Now, in the ADP report, we saw only 37,000 jobs created. The market was looking for over 100,000. And it's strange because you had the JOLTS report just before that, and it went up and it said that another 200,000 approximate jobs were put out for hire. So is the ADP off? I don't know. The one thing I warn you is don't extrapolate the ADP number into the U.S. jobs report that comes out on Friday. That generally is something that doesn't work well for traders. I've been around this long enough to realize that. Challenger Group is going to come out with their U.S. planned job cuts data at 6:30 in the morning. We're going to get the revised non-farm productivity data at 7:30. The jobless claims are going to come out at 7:30 as well. They're looking for about 236,000 in there. The trade balance data will come out for April at 7:30. And the European Central Bank at about 7:15 in the morning will make their announcement, and then followed by that shortly thereafter, a press conference with European Central Bank President Lagarde. She's up all the way, by the way, for another job. So the question is, how long is she going to hang? I wonder if somebody's going to ask her. She won't answer it, of course. She'll dodge it, but we'll see what she does with that. So what the market did today is that it looked at that weakness in the jobs report, the ADP one, and you gave a solid bid into the bonds and notes. I mean, big time. So the market is telling you a story. The market is saying the moment it sees that the jobs data is really weakening, they're expecting the Fed to come to the rescue. So the market moved up on the prediction market, the CME Fed Watch page, if you ever go look at it. They had 2 cuts priced in for the year. Now there's about 2.25 priced in because the ADP swayed that number. We'll see what happens. Do I think there's any chance that the Fed's going to make a cut next week when they meet? No. That doesn't mean it can't happen, but no, I don't. Gold still backing off a little tonight, the 3,400 level. Remember, 35 and a fraction's its all-time high. It's doing a good job. I wonder what happens to metals if the dollar breaks to new contract lows. I would think it gets everything's attention and it becomes bullish, the commodity complex. The market finished down 42 points at 98.73. You're honing in on that, so I'd be watching it. Most of the currency tonights are stable to slightly lower. So when we take a look at the S&P, if the market finished like this for the week, you'd be up 1% on a weekly close-only chart. When we go, by the way, I changed the font styles here and up here. I think they're easier to read. You know, I've been looking at this so long going, I know I can do better. It took me an hour to figure it out, but I got it done. We have here, obviously, a market that has just run to the upside. As you know, back over here where I've got the blue line is where the contract high is. Is the market going to go for that and take out the all-time high? Well, it certainly hasn't given you any sign that it's giving up any of the gain. You'd have to get back over here, 58.53, in order to get the market nervous that it ran out of momentum to the upside. And as you can see, when I told you you had bullish crossovers, the 18-day average in red is now over the 200, the 100, a lot of support right in that whole area. So this market market is still bullish. I still believe that the crowd, the public, is buying different markets within here, and these indexes are holding up. I'd be very cautious if I were you against that 59.79 level. That is the 60.20 level. That's the upper Bollinger Band. You're at 59.79. So I'd pay attention that that's going to offer your next level of resistance in the market. And obviously, the big support, look at how it comes together with the 100-day average of 58.17 and 58.26. The Bollinger Band, that's where your big support level is in the market. In terms of momentum, you have the market, both numbers are over 80, but that's for tonight. They weren't that way on the close. So you have a market that is overbought, getting into the resistance of the upper Bollinger Band, going into Friday's all-important jobs report. That's what I'm looking at for the market. And I'd be a little concerned that we've really come up so far, and the market is telling you, hey, if the market weakens on any of these jobs reports, is that bullish or bearish for the stock market? That is going to be the big question. The market will price in, the Fed's going to come to the rescue, but if you need a rescue, that means you should be weakening in this. So this is an important jobs report. Don't underestimate the importance of this one. When we come to the NASDAQ, the picture is very similar. The difference here, is there one? Well, both numbers are over 80 tonight. Were they over 80 yesterday, which is today as I'm talking? Yes, but not the day before. So what we have is an overbought market that cannot embed tomorrow. It could do it on Friday. And I see an overbought market reaching into the upper Bollinger Band for resistance at 2185. I'd use caution is what I'm saying. The record high, 22,699.50. So is the market due for a correction? I don't like picking tops or bottoms. The trend is up till it isn't up anymore. A warning sign would be getting under the 21,071 level, but that's quite a ways from here in order to take that out. In the Dow, the battle has been the 200-day average in green and the 18-day average. Look at how you keep narrowing in just like that as you're right there fighting. Unlike the other indices, this is not overbought. It's in an uptrend. And the 100-day average, if you can break through this with verve, maybe you can get up to the upper Bollinger Band at the 42,950 level, right in that zone. It's very possible. When we take a look at the Russell, you went up today to the 100-day average, but remember how far away you are from the highs in this market. It's a whole different breed here. You have a market that I should have taken this red line off. With the action, you have higher lows, higher highs. Let's call it the way it is. It's in an uptrend. The market support should be the 2087 level. You're in trouble if you get under the 2042 level. That gives up all this good work that the market has done. Why did that come alive, by the way? The reason it came alive is interest rates fell rather hard today. That gave it the verve that it needed, that push, because that is such an interest rate sensitive index. The DAX just continues to develop a bullish embedded reading. Each break is getting bought. The Bollinger Band's the target until you lose that embedded reading. When we come to the 30-year bond, this is how the market came alive off the ADP report. If you think that's a small move, boy, are you wrong. This market moved 1 in 14/30 seconds, so that's basically on the day about $1,400 in a futures contract. That's quite a move that it's done, and it's the highest we've been in a while. You haven't been here since early May. And the resistance, now I'm not looking for it to get too far. It's got resistance right at that upper Bollinger Band. Let me bring it back to you so you can see it here. And there you go. So look for the resistance between there and the 100-day average. But this market is definitely out of its downtrend and overbought almost instantly doing that. In the 5-year note, you stopped right at that number, that Bollinger Band top. Overbought market, hit its upside target, and it too had a nice gain today, a big reversal day, as it saw the ADP numbers and it went, uh-oh, what's going on? Now, if you start getting under this number back here, this contract low in the dollar index, watch out. The market actually, if it's down and takes out today's low, gives you another pattern of lower highs and then lower lows. The support in theory should be the 98.22 level, but if you start down and you get under the 97.60s, do this. Close your eyes, because all kinds of bad things can start happening in this market, which will get bullish things going in markets priced in dollars as the dollar just keeps falling in value. And that's one of the things, by the way, that has been helping with the tariffs. Before I go to the next charts, as the dollar keeps dropping, and if you don't think it's been dropping, it's a heck of a drop. Remember, this is when you announced tariffs. Look where you were, the 108 level. You've given up roughly 10% value in the dollar. It helps cushion that impact, and that's one of the reasons we're not seeing that high inflation numbers and you see them falling, is because what we're bringing in with the tariffs is still there. And all of you that want to accuse the president with his taco trade, well, he did sign the bill. So now it goes into effect on aluminum and steel. We'll see how fast he takes it off, because that's where it is, the idea that Trump always chickens out. We'll see if he lowers that. I know that a number of countries are preparing different things to fight it in one way, and the question is how much. Remember, today also is the day that the president asked for the best that each country can do on the negotiations so that he can decide what he does between now and come July 9th when the tariffs are supposed to kick in. Lot going on. In the euro currency, well, are we embedding? So let's take a look. Both numbers over 80, but you can't count Thursday. We don't know where the market's going to finish. So Wednesday, which is today, both are over 80, not the day before. So you're not with an embedded reading. You're overbought. The resistance is up here in that 115 area. You can see the support in the market, and the British pound is back down here. But as long as you have an embedded reading, why not target 136.48, the upper Bollinger Band? In Bitcoin, I don't know if there's any real downside to this market right here. I question it. It's oversold. It's in a downtrend. Maybe it can get to the lower band at the 101,000. Let's call it 101,800. That's possible. But I think it's more, I think it acts like it wants to fight at that 18-day average for a while. Then we come to the energies, which I still don't understand why the market rallied on the continuation of 411,000. Now, OPEC came up with another statement today, and it sounds like the Saudis just made it very clear. They're talking going year end, which is increase, increase, increase all the way through, and that gave the market a little bit of a reality check. Remember, you still have Kazakhstan. They're not paying attention. You have cheaters in there, and the Saudis are tired of giving up their market share. They want it back. I guess they believe the prices, because of summer demand for driving, heat, energy needs everywhere, won't collapse even with those demands coming on the market, or rather supply coming on the market to meet those demands. You have a lower low, higher high, sideways action right here. You went up to the Bollinger Band and completely failed there in the crude so far in WTI. And like the Brent, you have a lower low, higher high. I call this more noise making. I've said I don't like gasoline right here. You've heard me say that since going into Memorial Day, and we have certainly backed off quite a bit here. Now, I would use the highs made this week as a springboard. If you clear that number at the 209.24, you probably have run your steam out on the downside. If not, the 201 level, 200.99, is where the market might be headed right now. Natural gas, well, I keep looking for the first hot day, because when the market says that there's a heat wave coming through the country, expect this to give you a rally that could carry you back to the 400 level. Until it comes, you don't need that gas. So each Thursday when we look, we should see another build in it. Tomorrow's Thursday. We'll see if what the IEA comes out with. But right here, any move over 377 could be where the market starts picking itself up and trying to anticipate that heat wave coming. Until that's taken out, the bears are in control. I look at the pivot number going to be around the 362 level. We'll see what the market does from there. Want to remind you, what you hear me doing here, I do in a lot more detail in the mornings. So whether you trade spiders or futures, I put out 2 updates. I'll just talk about, I'll let the spider run because they do the same. At 6 in the morning, I put out the futures. I put that out at that hour because most people are still, the markets, the volume's just starting to come into the market. And at 7:30 is when it all starts picking up. I do it because also how many spiders ETFs are based on what the futures do. It's monstrous how many of them there are that look at that. So I don't talk the way I am here. I'm able to say, I want you to buy here. I want you to sell there. Here's your profit objective. Here's your trailing stop or a stop. Leave open this, do that. And you get my special reports on top of it. So there's about 20 to 22 videos a month. It's inexpensive. You work with it by going to iraepstein.com, the word research. Got it? iraepstein.com research. Right up at the top here, there'll be icons, one over here as well. Give them a click and join me in the morning. All you need is one idea, and I think that takes care of things, right? I will be wrong. I will be right as well. You take care. I'll see you in the morning.